Well, good morning, everyone, and welcome to our monthly Successful Trader of the Month webinar for December 2015. And Successful Trader of the Month is a program that Sherry and I came up with to reward and honor those traders who've put in the work and as a result are doing awesome with trading. They receive the prestigious Lock in Your Successful Options Trader hat, and they receive an entry for a drawing to attend one of our free events. Successful Trader of the Month is also for you, the aspiring trader, because by having those successful traders share their experience with you, you'll gain insightful and useful insight and become inspired by knowing that it can be done and that there are many different paths in which to do so. A trader can qualify for Successful Trader of the Month in several ways. First is to provide a trading plan and a recent trade that we'll evaluate. Second would be to stand out by helping in the community. This might be through sharing useful information or providing guidance or providing encouragement. Third might be is if I notice someone who breaks through a significant barrier or overcomes a challenge. And fourth would be for creativeness. In other words, someone who's successfully adapted their trading to their unique personality, whether it be through one of my styles or someone else's, or even better, maybe even something that came up on their own. Today I am speaking with Kevin Lee, but before we get going, I actually do need to quickly run over our disclaimer material and let you know that the presentation is given for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also make sure that you're aware of all your risks prior to placing any trades with options, as they do carry significant risk. We may use hypothetical computer simulated trades. We may use live trades if we go over an example today, but keep in mind if they are hypothetically computer simulated trades, that the results are believed to be as accurately represented as possible. And if they're live, I have not verified them myself personally. So just keep that in mind. So this month, we are talking again with Kevin Lee. Good morning, Kevin.
Hi, good morning, John.
And it's evening for you because you're way over there in Singapore, aren't you?
Yeah, that's right. It's 10 p.m. now.
Oh, we're keeping them up late. That's great. So, Kevin, I chose Kevin this month because I think that he's been consistently successful as a trader pretty long term. I mean, we've been talking for a while, right, Kevin? I remember we first made contact quite a while ago, and boy, this outstanding progress and following and improving his methodology. So that's why Kevin was chosen.
Good. So, I'm glad to be on, John.
Excellent. Yeah, we're glad to have you on. We appreciate that. So can you tell us a little bit about yourself? Actually, what you can do is you've put together a slideshow, right?
Yeah, I've got a slide deck that I can show.
Okay, great. So I'm going to make you the presenter, and then you should be able to share your screen, and you can tell us a little bit about yourself.
And, right. Oh, can you see my screen now?
Not quite yet. Yep, there it is. Yep.
Okay, let me make this. All right, so that's me at a corner, and the picture you're seeing here is the skyline of Singapore.
That is gorgeous.
Yep, it's a nice, nice picture. So, John, yeah, I think I know you since the Sheridan days, and I've been trading for almost 7-8 years now. I'm now a full-time investor trader. I'm based in Singapore. But before I became a full-time investor trader, I spent about 25 years in the IT industry. I worked for various U.S. companies like Intel and Seagate and EMC. So I started learning options around the 07-08 time frame, right before the financial crisis. I went through different learning schools and different methodology. Then I went through lots of different techniques. Some were successful, some were not so successful. Later I'll talk about that journey. I think that journey is quite useful for many others who want to take the same path. So now I'm doing full-time, managing my own money. I don't manage other people's money. It's a full-time job for me. I manage two types of portfolio. The first type is the first portfolio consists of high dividend stocks that generates consistent income. I think this is very critical for me because the second part, which is option, I wasn't sure initially whether that can be consistent. So I needed the first portfolio to ensure that even if I don't generate income from options for 1 or 2 years, I will have no problem. So, and then I carried on, and currently I still manage this two portfolio, although I must say that I'm now plowing money from the first portfolio into the second portfolio.
Okay, so just something I was thinking about is, so you spent a long time in the IT industry, and if you're in high dividend stocks, you must have saved or collected a fairly large amount of money, and you've invested in, I don't know, what, mutual funds or something, or just your own?
No, things like REITs as well as high dividend stocks.
Okay, fantastic. And you were taking the income from the dividends themselves?
Yeah.
Okay.
So I generate a nice stream of dividends, enough for me for basic living expenses, so that even if I generate zero income from options for a year or two, I would be okay.
Right. Now, how do you deal with, did you not care? Like when the stock market goes down, of course, you still get your dividends, right? So that's good.
Correct.
Right.
And I don't really care about the daily movements. When I started, I watched that portfolio every day. I would know my net liquidity, every day. But now I realize that's bad. Now I stopped looking at it.
Oh, that's fantastic.
But the good thing is that I bought into a lot of those stocks during the 08, 09, 2010 time frame. So I've kept them for a long time, and now they're generating very good income for me.
That's fantastic, and that gave you some confidence that you could go out and I kind of like this because it's actually, as we do another website, financialfreedomclassroom.com. We talk about financial freedom, and one of the things that we like to see is people having multiple streams of income. So this is kind of like having multiple streams of income within the stock market, which is pretty cool.
Correct, and also if we are under stress to generate income every month or every 3 to 6 months from options, I think that will impact performance.
That is an excellent point, right? Yeah. The from a psychological standpoint, the need to have that money can really, I guess it would make you overtrade, wouldn't it?
Exactly, or to do stupid things.
Nice point.
Yep.
Excellent.
So after I've started on this journey, I started learning since 07, 08, and then I became confident enough that I took the plunge in 2013. I became full-time, and ever since that, I love it. That was the best career decision in my life, I think. And I love it because, this is the only job, the only business that I know of that there's no boss, no customers, no supplier, no unwanted meetings, no unnecessary business travels, no corporate politics, and most important of all, nobody can retrench me. I have complete control over my own destiny. So that's what I really love. And then instead I get to, I have complete freedom to do things that I love, things that I'm very passionate about. And after learning options, this is like I was completely passionate about it. In the days during the learning period, I disliked weekends because the market weren't open. So, I actually continue to trade using on-demand with TOS. So that was how crazy I was at that point in time. I was completely passionate about it. And a good thing about being a full-time trader is really that I end up spending a lot more time with my family. When I was working in the IT industry, I consistently travel. I don't get to see my kids. Now I do a lot. And it's also a surprise to me that it is actually quite intellectually satisfying. There's so much depth in options trading that I get to learn. The more I learn, the more I realize the amount of things that I need to learn. And obviously it's financially rewarding, and thanks to you, John, I think you played a critical role for me to transition from being non-consistent to consistently financially successful. And a lot of people ask me that, isn't it very stressful to be a trader? And my answer to them is absolutely not. Absolutely, it is much less stressful than working for a large corporate, I think. And most important of all, is the most healthy lifestyle I've ever had. Now I spend a lot of time playing sports and exercising. So
that's fantastic. You know, one of the things that actually is, I mean, I see it as a benefit, but a lot of people see it as liability, is you're overseas, and I mean, you kind of have to trade in the middle of the night. But what that means is you're not watching the market. I think a lot of the people in the U.S., they get completely stressed out because they sit there in front of their computer all day watching their profit and loss.
Yeah, that's very true. In my initial days learning to trade, I actually learned day trading. I day traded the S&P E-mini futures. Oh, that was stressful. I had to glue my eyes to the screen, and if I were to go to the bathroom, I have to close my position.
Yeah, right. I have some people who actually have bottles they sit with at their bench, which is, I know it's a bad image, but it just goes to show you how stressful it really is.
Yeah, and I decided not to do that, and luckily I found options, and now trading is much more enjoyable.
That's fantastic. And since you do it at night, you basically have all day where you can completely chill out and spend time with doing what you want to do. So it's awesome.
Right, and John, initially when we were learning the strategy that we did at that time, because of the high gamma, we had to watch it full day. And you know, ever since that, I learned from you doing M3 and the lower gamma trade. I only had to look at it an hour or two a day, and sometimes I even spend like 15 minutes before I just turn off my computer. So I think that is extremely important for people who have a time difference with the U.S.
Right. That's excellent advice. Excellent advice. I
Yep.
think that's actually excellent advice for people who are actually in the U.S. too, by the way.
Yeah, that's true. We were chatting just the other day, John, that Netflix is a good thing. I was watching that day when the market came down 40 points and then completely rebounded. If I wasn't watching Netflix, I would have done something.
Right. It was worth that $10 a month for the Netflix, right?
Absolutely. Yeah, so let me talk a bit about my learning journey. As I look back into the past 8 years, I see three distinct phases. The first phase is when I just started to learn about the basics of options, what is put, what is called, and then I progressed into a mentoring program, and I got to learn about trading plan, etc., etc. So I gained competency in options trading very fast during this period of time. At that point, during those days, I traded 4 to 5 strategies simultaneously: low prop condor, high prop condor, butterfly, triple butterfly, calendar, everything that you can think of, monthly, weeklies. So I tried it. Part of it is to learn, and part of it at that time, my thinking was diversification. Then I realized that having 4 or 5 strategies at different timing actually weren't diversification. It actually meant that at any point in time, something will be in trouble.
Yeah,
So
that too, Kevin, right? But another thing that I noticed too, when I mean, I think everybody has to go through this where they trade 4 or 5 strategies simultaneously, and they're learning, right? Because they're trying to figure out what they want to do as a trader. But I think, when the market crashes, all the strategies go.
yeah, exactly, and all kinds of mistakes will come in. Put become call, call become put, and you close close a position in a different month, and etc. etc. So I've been through that, but it was really good learning. I traded very small at that time, probably about $5,000 to $10,000 per position. So 4 or 5 strategies, only about $50,000. So I spent a couple of years doing that. It was really good learning. But then after a while, I kind of like hit a wall. It's like, okay, I've been doing this. I know how to be profitable, but I'm not consistently profitable. I could make money a month, 2 months, 3 months, and then I would have a big loss. I continuously try to look for the next best strategy or next better strategy. So I join forum, I buy programs, I hire mentors, everything that you can think of, I tried it. And then I weren't making much progress until I realized something, that in order to move from this first phase to the second phase, actually I need to do less rather than doing more, which is what I realized. I had to focus. I need to, instead of trade 4 to 5 strategies simultaneously and continuously trying to look for the next better strategy, it is much better that I focus on trading 1 or 2 and 1 or 2 in 1 or 2 underlying. Get really, really comfortable and really, really knowledgeable about everything regarding this particular trade. So in the beginning, I was, if you look at my trading desk, you will see 2 or 3 monitors, and then I would have, 2 or 3 dozen different indicators and charts that is open. So I was always looking for the right timing to get in, right timing to get out. There will be pivot points. There will be MACD. You have stuff like that I'm looking at. What I realized is that all those complexity doesn't actually help me. It made it worse. It means that decision becomes much more complicated, and a lot of times when market moves really fast, that causes a lot of anxiety, and that causes performance problems. So as I move from phase 1 to phase 2, the action that I took really is to simplify. Simplicity actually increased my performance. So I cut away most of the strategies and focused on trading just 2 things. One was the Weird that I learned from Dan Harvey, and the M3 that I learned from you, John.
Nice.
And that made a huge difference. That actually turned around my entire trading performance.
That's fantastic, and they're both very similar trades when it comes to T+0 line profiles. So, and they,
right,
yeah, they're very nice reacting and stuff. So that's awesome.
Right. Then I started to see consistent results, and like I mentioned just now, because of the time difference, this low gamma trade really helped me out. Instead of having to glue my eyes to the computer before the market starts till the end, I now can only I can afford to just look at it for 1 or 2 hours a day. I think that was really, really important.
Then, yeah, especially since it's nighttime.
Oh yeah, exactly. Before I transitioned to this phase, I would start about 8 p.m. my time, which is 7 a.m. your time,
Mhm.
preparing, going through all the news that I can find, watch, if there is any key announcements. I would be watching, those unemployment data, any Fed announcements, and all those. I would be on top of it. Now I don't care. I realize that even if I know, there's nothing I can do. And if I take action in the first 30 minutes, I will get killed anyway.
Right. Yeah. It's really interesting, and it's funny how sometimes traders or we kind of trick ourselves or lie to ourselves into thinking that we know what the market's going to do because certain news is coming out. There's a lot smarter people than us that have a lot more
Right.
information than we have that are already pushing the market one way or the other, depending on what the most likely thing's going to happen. So it's really, I mean, really the best thing you can do is just see what happens and deal with it.
Is this control panel blocking your view?
It is not. We
It's
cannot see
not.
it at
Okay,
all.
so, oh, you cannot see it. Okay, all right. So I can move it to the side. All right, then then as I gain competence and gain consistent result, then I realized that in order for me to go to the next step, the next level, I need to start looking at my trade differently. A lot of us who started trading with a plan, we follow the plan as it is written. When you get to 50 delta, do this, 100 delta, do that. When you see a delta, a theta ratio, hit this, do something else. Mm-hmm. A lot of times that is very comfortable, that's very easy, and especially when it drives consistent results, sometimes complacency will set in, and then we'll get into a steady state where we don't want to change. That becomes a comfort zone, especially for the past 2 years, John. It has been so easy. We didn't really have to do much, and we end up with 50-60% annual return. So I think that is a bit dangerous in my opinion. That if we were to just follow a almost like not a black box, but a gray box type of trading, you know something about it, but you don't really know a lot about it. What if the market change? That trading plan may not work anymore. So I decided that in order to lift myself up to the next level, I really need to dissect the trade, really ask the question of why. Why, when I see certain condition, I need to do certain actions, and push myself to do the research to understand, are there better ways to do it? What are the trade-offs when we were to make any decision? So I start to look at butterflies not as butterflies, but instead of two spreads. And then when I start to look at it that way, things make a lot more sense. The decision for making adjustments make so much more sense then. So my goal in this phase, which is where I'm at right now, is really to be able to internalize things that I learned, things that I'm trading, so that in the future I can own the trade and maybe even be able to create my own trade. That will be a goal that I set for myself. And I think at this point in time, we know the mechanics of the trading. We can be successful, we can be consistent, but our subconscious mind is still the next most important thing to be trained. I don't think I'm there yet. Sometimes I still kid myself that I'm not stressed out, but when the market moves fast and I see my losses accumulate, my subconscious mind is still jumping out at me. So those are the areas which I think is my focus.
That is fantastic, and I think your comment about dissecting the trade and stuff like that is really good, and I mean that in the manner that I think when we start trading, we look for this set of rules that is going to work everywhere, every time, no matter what, and it's going to work spectacular every time. And they simply don't exist. I mean, the reality is in the options market is we have, when the conditions are different, they simply price the options differently. So the same position with the same delta numbers and the same this or the same that is not going to react the same. Sometimes the market's trending. Sometimes it's trending up. Sometimes it's trending down. Sometimes it's sideways. Those are all different market conditions. And the kind of the principle behind the M3 trade in general is to give you a structure or a framework that's going to work okay in just about anything. But it doesn't really excel in any one thing either necessarily. But there are times when the M3 trade is going to be break even, or loss, win, loss. But the idea is that you stay in the market without getting killed, and then you learn how to deal with the market environment changes. And I think that's extremely important when you go out on your own. Because if you still have your job and stuff and your trade stops working, not a big deal. You stop trading, maybe you go looking for something else that works. But I think when you come out and you say, I'm going to depend on this now for income, and like you were saying, Kevin, and I think a big help to you was that you had some dividend income coming in. Is that, hey, if the trade doesn't win, it's not a big deal. And the reality is, even if you go out full time and that's the only thing you're trading, you still have to have that attitude. The trade doesn't win. Hey, that happens sometimes. It's not a big deal. And then have the knowledge to come in and say, well, these are the market conditions. This is why my trade lost. What can I do in these market conditions to make sure that that doesn't happen again? And you can make your minor modifications, and you can continue to trade and make money. Does that make sense?
Yep, absolutely, 100%.
Awesome.
100%.
Yeah, I think that's an important point.
Yep. So then, as I was thinking about it, and there are things that I, over the past few years, I learned that is useful. I'm going to do more. There are things that I stop doing and make sure that it will not resurface. So things that I want to do more is really to plan what I do and then do what I plan. I think that is really, really critical. And John, I think you took it to the next level by making sure that our plan is well back tested, and we back test our trade at 3:30 in the back trader. Make sure that we trade at 3:30, and for me it is about 1 to 2 o'clock. So I think that is really, really critical. That if we want consistency, we have to do things consistently. And just now we talk about understanding the why instead of just following rules. And also be data driven, and I realize that in the world of trading, there's so much misinformation out there. It's really easy to get lost, and the way to ensure that we are going in the right path is to be data driven. Anything that we look at a trade plan or strategy, or somebody told us something about a market pattern, for example, I now insist that I look at the data. If there's no evidence to support it, I will just junk it. Learning, unlearning, learning, and then unlearning again. I think that is a repeated process. It will continue. I think that is really, really critical as the market moves and change. Whatever that we learned before and proved to be successful might not be successful anymore in the future. And just now you said, John, about losses. I think this is a big one. The ability to embrace losses. I think that one we still struggle, despite the fact that we have been trading for so many years. The feeling of losses is something that everybody is fearful of, and it doesn't feel good. But it is important that we are able to understand that is part of the game.
Right.
Things that I wanted to stop doing, and I got a whole bunch of them. I just list down those that is important. stop watching CNBC. I think that one is very important to me, especially before market opens, because there were so many instances whereby I heard somebody on CNBC or Bloomberg or whatever said something, and then it changed my perspective of the market. Instead of making an adjustment, I stopped making it, or when I'm not supposed to make an adjustment, I would make an adjustment. No
Right.
matter what I told myself, it will happen.
Unconsciously, yeah, and you were just talking about the unconscious earlier. Unconsciously, and this is scientifically proving that there's this thing called priming, and when you prime someone with certain things, it automatically shifts the way that they think. And watching CNBC, I mean, if you say to yourself, well, I'm not going to let this influence me, the reality is that it actually primes your unconscious, and
Yep.
it's going to bias you.
Yep. So the best way is to stop watching, especially right before the market opens.
Right.
So I have to stop watching my P&L, constantly. That has an impact on performance, because it will cause me to do things that I'm not supposed to do. Avoiding losses here. Just now we were talking about embracing losses. That is a mentality. Avoiding losses is an action. There are a lot of times when we change our my trading plan just because I wanted to avoid losses, and then things get worse.
Yeah. Yeah, I was talking to somebody this morning, or actually yesterday, I think, Kevin, and he was kind of in an M3 trade, and he was near his loss level, and he wasn't that close, but he was kind of near, and he just wanted to keep flattening it out to avoid further loss. And I said, look, I mean, if you're always trading completely flat with a T+0 line and you're drawn down, you're not giving yourself a chance to win.
Yep.
Right.
Exactly.
You're just taking away that chance.
Exactly.
Yeah. Excellent.
And then and I wanted to stop predicting market direction. I tried it. I'm not good at it. Some other people are. So I just want to make sure that it doesn't impact me anymore. And also stop looking for the perfect trade. It doesn't exist. So I think these are the important key learning. I think the hard part is, am I able to continue to practice?
Right.
So I would say the key success factor for me is really passion and hard work, because that underlines everything else. We will get into rough patches. We will get into difficult periods. We will have to spend the 10,000 hours. It's really a lot of hard work. If we do not have the passion that underlines all this, we will give up. Where I've got many friends who in Singapore who wanted to do the same thing that I'm doing right now, and I'm giving free coaching to them. The success rate is actually very low. People wanted the lifestyle, but they didn't want to put in the hard work, and neither did they have the passion. So most of them would just give up after. Some give up a few months, some give up in a year or so.
You know what that tells me, Kevin, is that the path is there, and you can. I mean, in other words, the mechanics are there, the coaching's there, everything's there to do it. But the reality is, there's only a small percentage of people who are actually willing to put in the right type of work in order to make it happen. Does that sound right?
Yeah, exactly. And when I just joined this industry, I just joined trading, people told me that this can't be real. If trading can make consistent money, nobody will needs to work. I didn't know how to answer that. Now I do. Then the answer is that it's not easy. It is a lot of hard work.
Right. It's as I say, it's simple, but it's not easy.
Absolutely. It is no different from training to be an engineer or doctor or plumber or pianist or whatever. You need to put in the 10,000 hours to be successful. So I think having the passion for it is really, really critical.
Indeed. Yeah, agreed.
Yep, and then with the passion, we need to continuously have this mindset of of improvement. It's a constant and never-ending improvement that makes the difference. Being good is the enemy of being great, and it came from this book, and I really like that phrase. It's very easy for us to get into a performance plateau once we have the first level of competence, but if we do not put in the constant and never-ending improvement into our trade, what might work today might not work in the future. And therefore, it's so important that I think I need to continuously sharpening my saw, so that whatever the market throws at me in the future, I have the right mindset and the ability to handle it.
That's fantastic, and that is a great book too. And I suggest that you guys pick it up if you haven't read it yet.
Yep. So I think that kind of like summarized my my journey. I hope this is useful for those who would like to embark on the same journey.
I think it's fantastic. Yeah, it's got all, you have all the principles down and the right things to do, and just follow that path. And I think you've laid them out perfectly here as to what your journey is. And boy, that was great. I hope you guys actually watch this a couple times and just think about the concepts that Kevin was talking about, of not watching your P&L, and of the work that needs to become, and continually improving your trade, planning your trade out ahead of time, following your plan, stuff like that. I think all that's just very powerful.
Yep. So now I can talk a bit about my my trade. Now I've simplified all my trading into one big trade. It is kind of like a modified M3. I don't follow the M3 guideline strictly, but the principle behind is M3. I've scaled up quite significantly over the past 2 years. Today I'm trading on average 150 to 200 lots of butterflies. I've got a planned capital of $500,000. So just now we talk about trading time. It is 1 to 3 a.m. in Singapore, which is depending on whether it's winter or summer. It's between noon to 2 o'clock or 1 to 3 p.m. in the U.S. It is difficult, however, I've already adjusted my body clock, so I've no issue with that right now. I enter around 40 plus to 50 days, depending on availability of funds from the previous month. What I do is that since I can't watch the market so closely, I cannot trade too close to expiration. Therefore, I would usually exit by 14 DTE. The absolute cutoff is 10 DTE. I seldom do it. Sometimes I do, but even if I exceed the 14 DTE, I would have a very small position. Mm-hmm. So I've got a profit target of about 10%, which is $50,000 a month. Average profit around 6% is actual, or about 40 to 60% per year.
Nice.
And my adjustment, I've actually simplified it quite a lot as well. I look at delta, projected P&L, and delta theta ratio. But I think the more important to me is the projected P&L. I want to make sure that if the market moves 20 to 30 points above or below the market, I will not lose more than half of my target profit. If I will, then I will make an adjustment, regardless of the other two conditions. Obviously, I also look at other Greeks, look at the Vega and Theta. All that I do, as that will be part of my my fire drill. But I think I make use of the projected P&L method more than the others.
I think that's actually more important, and we use delta numbers in the M3 program because that's pretty much what everybody's used to using. But I think, yeah, to do a projected profit and loss depending on your T plus zero line, and not just what I think, I'm assuming you probably do this, Kevin, I don't know, but when you look at a T plus zero line, you have to determine if that T plus zero line is actually going to hold that form or not when the market moves up, right? So you kind of have to you have to get in your head and make this sort of a prediction, and it's not always correct, but if you start to really learn what your T plus zero line does, you can kind of project what it's going to do when certain market movements happen, and you can take that into account.
Yeah, that is very, very important, John, and that leads me to my realization that the volatility skew actually plays a big role in determining the T plus zero line. In the past, while I was looking at Greeks like science, like physics, and I realized that it's not like physics.
I think especially for engineers or people in the IT field like you were, I mean, yeah, they want to see their model and they want it to be an absolute, and models are very far from absolute.
Yep, it is very far. So, and I realized that a lot of things that I learned in the beginning of my career weren't correct. When it comes to volatility, like for example, we had this debate about whether a calendar is a positive vega or negative vega trade. It can show positive vega in Greeks, but it might be negative vega if you take into consideration the difference in IV movement between the front month and the back month.
Right.
So things like that plays a big role. So that leads me to my next point. So I start to put together tools that I use on a daily basis to help me with my trade. During my fire drill, one of the issue that I had in the past was, how do I determine whether a butterfly is a good the butterfly mid price is a good price or not? And you helped me a lot, John. So what I did is I downloaded this kind of information from TOS in the past, and now I realized that I could do that directly from Ovi. So I download it on a daily basis. And what you see here is a table of the butterfly prices. These are this 1, 2, 3 is every day, different days. What I've listed here is, like, for example, this 15.15. This is the butterfly price of a 50-point white butterfly with a center strike of 1120, and this one would be the 1110. So then at one glance, I know how the at-the-money butterfly price change over time.
Right.
And then if I were to if I want to put in, let's say, a bearish butterfly 20 points below the market, then I would just look at this one and this one and this one and this one. Then I just move that way.
And notice the price changes, because your butterfly is supposed to be, and from a Greek standpoint, it's supposed to be positive theta, right? And it's supposed to have all these Greeks, but you'll notice that the price change doesn't necessarily follow that model.
Yep, exactly.
Right.
So,
another thing too is,
then I
look at the 31st. Look at the 31st, the price gain from an at-the-money butterfly. I'm sorry, Kevin, I don't mean to be. I just think this is a really cool spreadsheet that you made. It went from 1115 to 1275 all the way up to about 1385, right? So you had a really large price increase. And I'm sure if you do this every day, you can see it. But you got a very large price increase in a short period of time, and then you can see the collapse of the price right after that. So it kind of helps you determine when's a good value time, I think, right?
Yep, exactly. And I put this on top. This asset change means what is the RUT change for that day. Like this is RUT went up, RUT went up 8.3 points, and this day it dropped 7.7 points. and this line is the RUT price
Nice.
and days to expiration. So at one glance, I get to see this is really very helpful. And I have another version that is every 30 minutes for the previous day. So I look at it. This is a daily movement, and then I have a half-hourly movement. With these two, I basically know what is a reasonable price for butterflies today, unless the market move significantly.
Right. Yeah, I used to equate this as buying a used car because I used to have a used car dealership, and if you go out and you just look randomly at a used car and say, and it's tagged with $18,000, you have no idea if that's a competitive price or not, right? You need to do some research and have an idea of what these things are going for. So this is a great tool you put together.
Then I also plot the yellow, the orange line is a put butterfly, and blue is call butterfly. And then these are different days: 60 days to expiration, 59 days to expiration, etc. And this is the change of RUT for that day. You notice over here, the put butterfly is quite significantly cheaper than the call butterfly, whereas here they are kind of like bunched up together. So this one gives me a visual understanding of how the two different butterflies pricing are behaving. When we are at these few days, the put butterfly is significantly cheaper than call, and if we try to buy a put butterfly here, we will never get filled. So a lot of times the price that can be filled will be in between, but at other times both of these prices are wrong. And they are wrong relative to what I can see in the previous few days. So with a combination of these two, it actually helped me quite a lot in pricing butterflies, and for that matter, any type of spreads. I could turn this chart to be the price of a broken wing butterfly, for example.
Right. Nice. Yeah, that's a nice thing you've done there.
Then there is another thing that I look at on a daily basis, and that would be the volatility skew. So this is an example of a volatility skew. The red dot is where the ATM is when this data is taken. So we can see that when the market moves up from this orange line to the blue line, the volatility dropped, but the volatility drop of strikes at the higher strikes is significantly more than the drop in the lower strikes. So that I believe usually cost the significant slope in the T+0 line as the market moves up and the IV drops.
Right. Yeah, you get that drop in the T+0 line. Yeah, is that what you're referring to?
Yep. Yep, that's right. So and I realized that if we were to leave our right butterfly leg over to the higher strikes, it will suffer a crush. Mm-hmm. Therefore, it became my habit right now that as the market rebound, like right now, I would tend to bring the right leg of the butterfly closer to the short strike.
Right. That's assuming you're deep inside your tent, right?
Yep.
Yeah.
Yep.
Okay. Cool.
So these are examples of things that I use when I do my pre-market prep. So I hope this is useful.
I think that's fantastic what you put together, Kevin. That's great work there.
Yep. Well, that's all in terms of material for anything else that you would like me to talk about. You want me to show trade, or do we even have time for that?
Let's see. Well, it's quarter of. I think we have time. If it's not a really huge trade, I think people would like to actually see what you do. I know I would.
Sure. Okay. Let me see. I'm gonna get out of here.
Unless there's any questions that pop up, but I don't see anything at this point. Oh, wait a minute. Hold on a second. Let me see what we have for questions. I haven't been looking at it. Oh, nothing. Just good comments for you, Kevin.
Okay. All right. Thanks. All right. I've got two trades here. I can go over quite quickly. I can start with a easy trade. This is the one that for December 2015 expiration, I entered. This is my first tranche, and as I've explained, I took money out of my November and put it into December. So this is my first tranche. After a few days, I have more money. I put in the second tranche. So it looks like this. No big deal. And then nothing happened.
So you're just so people understand. So you're actually scaling into your entries with your M3. You're doing one M3, then you're adding another M3 later on. Is that what you're doing?
Yeah, exactly.
Okay.
Exactly. But I'm not doing it to time the market or to because I I have a certain market expectation. It is purely because I have additional money coming from November.
Oh, okay. Very good.
Yeah, so I know some other people do it like they will put in one tranche and then wait for 3 days and put in a second tranche. I don't do it that way.
Okay. So it was just a purely you had another trade open. You weren't fully invested yet.
Yeah, because my trades are overlapping.
Right. And
The
is
months
this a live
overlap.
trade, Kevin?
Yeah, this is a live trade.
Okay,
This is
great.
my actual December trade.
Fantastic. We just wanted to clarify that for everybody. Great.
Yep. And then nothing happened to the 12th. RUD has been going back and forth. It's great. P&L rise rise a bit. I did move the some of the strikes, but no major movement here.
Right. It looks like you moved maybe some of your short strikes to a lower price level and maybe some of your long strikes down too. Yeah.
Yep. Following the market movement. And then on the 13th, that's when the market moved down. This is when I start to plow in more money. And this month I actually under traded. Usually I trade about 150 to 200 butterflies, but this one I'm only up to 130 butterflies. I was traveling that month, so I didn't want to put on too much. But as market moved down, this is something that I learned from you, John, that I could put in the butterfly behind to cut delta first and then figure out what to do with the butterfly on top. I think that is a really good technique. So I cut it down, and then actually this was the 13th, and nothing happened in between 13th to the 20th. Market was just going back and forth, and then I pick up a nice gain of 18,000 right now. My target profit was 50,000. I'm still about less than half of it. Now my delta is becoming too negative. With 100 over butterflies, I'm basically looking at 700-800 negative delta before I would make an adjustment. Right. So here is an adjustment point.
And you're also looking at your T plus 0 line profile on how much you're losing with a move, right?
Correct.
Yeah.
Yep. This would be a great example if it moves 20 points up. Although this thing may rise a bit, but then I will be losing too much. So that's what I did is I pull back some of the long strikes closer and push some of the short strike up, so that I can create a more a smoother T plus 0. Bringing the long strike down will incur negative theta. So this moving the short strike up will compensate. It will give me back some theta, so that when I the net result of this is that I still have a healthy theta and a reasonable delta.
Right. I'm often asked, do I do one or the other? And this is a good example of, well, you can do both.
Exactly, exactly. Usually, if I have a lot of theta, then I will pull in my long strike. If I'm short of theta, if I do not have enough theta, or I have a positive vega, then I would have to move the short strike up. So usually that would be my thinking process.
Cool.
So after that, after the adjustment, so this is the adjustment. After the adjustment, this is the result. So this is the 20th. 3 more days, the T plus 0 line, the blue line, starts to sag again. Delta before the adjustment was like 800, I think. Then it starts to be ugly on the upside. Then I decided to pull back some more of the long strike, and the reason of pulling this back instead of pushing the short strike up is that my theta is very healthy. I've got a lot of theta, so I can manage. I can afford to pull back the long strike instead. And again, I create a nice looking T plus 0 line.
Nice.
So with that, that's 23rd, and then from 23rd to the 2nd of December, nothing much happened until now. I've got like 800 negative delta again. My P&L is looking quite good, half of my target profit, and then the other Greeks are still relatively okay, but I need to do a minor adjustment here to fix the upside risk. So that's what I decided to do, to push some of the short strike up. By pushing this up, I increase my theta while I decrease my delta. So it becomes a nice looking spread again. A nice looking line again. So this is the 2nd of December. And after that, there's nothing much happen until the 4th. I'm already at 40 plus thousand in profit. And since this month I under traded, it's only 120 butterflies. So actually it has exceeded my target profit. So I took it out. I took everything out for a 41,000 plus profit.
That's nice. Now, do you watch that butterfly pricing thing? Do you watch that during this time too, to determine maybe, hey, I'm at a day when the butterflies are really good value right now. They're really high price. Maybe it's a good time to exit. I don't know if you ever do that.
Absolutely, and this is that day. This day is strange. My P&L went from like $32,000 or $30,000 in the beginning of the day to $42,000 when I exit. It just collapsed.
That's beautiful. I think a lot of people, they see the $42,000 and they say, oh, wow, the trade's doing really, really well. I went from $32,000 to $42,000 today. I think I'm going to stay in it. And then the next day
will be
back
gone
down to 32 and it's moved 40 points or something, right?
Exactly, and this is a strange day. I remember this day because I was talking to my wife. I said it was a gift from the market maker.
Exactly, right. And you take the gift when you get it.
Yep. So this is an example of an easy trade. Then I have an example of a harder trade, which is my current trade, which is the February expiration. I started 29th of December. I was expecting
I have a couple of
rally.
questions, Kevin, if you don't mind.
Sure, go ahead.
Would you stay in closer than 14 days to expiration if your profit was lower?
It depends on the position. Do I have a good position to stay in? If I'm at the center of the butterfly of the tent and there's no threat, I might. Okay. But usually I try not to, because once it gets closer than 14 days, gamma becomes quite scary.
Right, and those profits can go away really fast.
Yeah, and you know the difficult thing for us in Singapore is that I trade around the 12 to 2 o'clock your time.
Mm-hmm.
And a lot of market movements happen after 2. So even after I've done my adjustment, I'll be exposed to end of the day movement and the overnight risk, which if let's say I've done my adjustment or I decided not to do an adjustment at the end of the day, my day, the market could move another 15 points before the market ends, and then move another 20 points at open. So I will have to be a lot more cautious.
Right. That's a good point. Let's see. What was this? Was this trade managed with the option view during all its recent problems, and how did you manage the problems?
Oh, that was that was a horrendous experience. I had 3 versions of option view, and I would be opening one and close one, and then to compare the Greeks and the T+0 line. I had the golden standard, which was the 7.64. That was the golden standard, and then I was switching back and forth. I couldn't use 7.64 entirely because it had some problems. So I wanted to backtest the other 2 versions as well. So that was a crazy few weeks.
Yeah, I think for all of us it was. But the thing is, that's one of the things with mindset and everything else is you need to be able to adapt to that kind of stuff. I mean, option view could go away someday. The government can come out with some law and change something on us. We just have to be able to adapt to whatever is thrown at us.
Yep, exactly. So during that process, I was helping option view to debug, and I learned a lot. I learned a lot about IV modeling. I learned a lot about the weakness or the imperfection of option software.
Right. Yeah, and I think and I'd like to thank you for that, for myself and for the community as well, for all your help with that. And Kevin was one of the reasons it was fixed as quickly as it was. So thank you.
All right. Okay, let me show the February, the harder trade. So I entered on the 29th again. This is partial entry because of as I free up capital from January trade. I added more, so now I'm up to 150 butterflies. Nothing much happened. That was the 4th, and then by the 6th, I was up some pretty good money as the market moved. I added some more. I added another 48 lots. So I'm now close to 200 butterflies already. So to me, this is almost a full entry, although I still have quite a lot of money left. And then that's when all the doomsday scenario started. I was expecting beginning of the year rally. I was told that people sold their shares in December for taxation purpose. They will buy it back in January. So
they lied to you.
So the market came down, and I was conscious about the risk on the downside as I was looking at my past 2 years trading result. All of my losses were due to downside. I've never lost a single time due to upside. So and I realized that if I were to adjust too late on the downside, and because of the time difference, sometimes when the market gap down, I could be rut could be outside the tent. So I've decided to move down once rut passes about 20 points below the center strike of a butterfly. So that's what I did, and I'm glad that I took that action.
Right.
So on this day,
I think one of the things with this trade in particular is pretty much, I mean, if you're trading it right, all your risk is to your downside, and you have to weigh your pluses, cons, pros and cons, or pluses and minuses, and say, if I roll back and the market reverses and goes up, hey, I don't make as much money, or maybe I won't make money. Maybe it'll be a flat month. But if it goes down, that's a real problem, right? So I think
Exactly.
if you're at a borderline call, to roll back is not a bad idea.
Yep, exactly. And I want to make sure that when RUT is on the downward slope, I would have to fix it. That's what I decided to do on this day. Delta is already more than 1,000 when I wanted to make an adjustment. RUT broke through the support of 1080 at the time. So what I did was I shifted the butterflies down. So I've got upper butterflies here, which I took out, and then I established the 1050 butterflies down here. So that is the adjustment, and this is after the adjustment.
Yeah.
I'm still up a little bit of money, and I'm pretty safe on the downside. That's when I call it a day. Nice. So after that, yep, market continues to go down, and then I always look at this red line, which is the at the money, and it's how far it has passed my short strikes. So again, Delta is picking up again, and I wanted to do something before I go to bed, so that it will not gap down the next day. And that's what I did. I shifted this this 66 lot of butterflies down, and that's what the adjustment looks like. This is after the adjustment.
Right. And
again, I'm still.
I saw you also you corrected the upside too, so in case the market did reverse on you, you didn't get hammered to the upside.
Oh yeah, that's what I always do, because after you shifted the butterfly down, the slope on the upside is quite scary. So I have to move. I have to fix that. So this after adjustment, and then the market continues to move down, but it wasn't very fast until on the 12th. But my delta is picking up picking up again. So so I thought I wanted to be a bit safer on this side, and I still have extra money, so I decided to put an extra butterfly at on the downside, and I'm actually up reasonably good money, considering the fact that the market had moved quite a lot, and I'm still up quite a lot of money. That's what I did. I closed the pink color butterflies, and I opened the green and yellow butterflies, and I shifted the whole thing down.
Nice.
Okay. Then one final thing is that my in the money call is already at the money almost, so I shifted it down, and I would look at the time premium. The way that I choose the strike is the time premium. I usually look at less than $10. Okay, so it looks good after RUT moved 130 points, and my my position is still up $17,000 until the next day. The big move down. This is when RUT really start to move 30-40 points a day, and the speed is picking up. So my P&L kind of like vanished. So I'm not comfortable again leaving the position where it is right here. I started to do the same thing. I removed the upper butterfly. This upper butterfly is already so far. The central strike is already so far from at the money. So I removed the yellow butterfly, and I added the green butterfly. And then I cut the delta down to 500 plus, and I've still got very decent theta. this is what it looks like after adjustment. And then the 15th that I remember, because that was a very busy day. That's the day when RUD came down 40 over points and then rebounded. So it was a huge down day from the start. There was a long weekend coming. So I wasn't comfortable to leave the position right here. So I had to do something. But unfortunately, when I started to do something, the position has already gone negative $25,000, I think. So what I did was I started to build a butterfly at the bottom and then move the butterfly from the top, removing the butterfly from the top. It was really difficult to get fill on that day, so it took me quite a while. And by the time that I'm done doing it, the market reversed. So that's when after 2 p.m., after I've shifted all the shorts as well as the deep in the money downwards, RUD did a big reversal. But it was okay. I kept it quite flat, but my P&L was down. This is about half of my target max loss, so no big deal.
Right, and a lot of that's temporary sometimes, but sometimes it keeps crushing down, as we found out, right? But yeah,
Right.
that's
The only thing that I was quite uncomfortable was how far away these long strikes are, and I know that the this MIV will collapse if RUD rebound. These two guys will suffer significantly. So I wanted to ensure that either I pull this back down or I push some of the shorts up.
okay.
So that's the end of on the 15th. That was a crazy day. And then on the on the 16th, something happened that day. Yeah, no, not the 16th, the 19th. Which was the day that this one, the 19th.
The 19th, yeah.
Yeah, RUD dropped 36 points again and then did another big U-turn. This was the day I told you about, John, that I was watching Netflix. I decided not to do anything. Learning from previous days, the week before, after I did everything, the market rebounded. So,
Right.
but my position is very different on this day. I
think most people
really
who lost February or anybody who lost February for the most part was due to this day, because they kind of had no excuse because they're supposed to trade in the afternoon. You're different. You trade in kind of midday, but I mean the system will work either way. But the idea is to stay away from the intraday moves. But yeah, adjusting down at the bottom here was quite painful.
Yeah, so I consciously decided to stay late. I watched Netflix and I decided to push the adjustment timing to 2:30 your time, which is 3:30 a.m. my time. Then by the time that I look at my toss, I thought it was wrong, because when I saw positive 8 points, I said, wow, it went from negative 36 to positive 8. And I did nothing. That was that was interesting.
Right. Your first impression is, oh, toss goofed up again, right?
Yep. Toss goofed up again. Just like what that was my experience during the 2010 flash crash. When I looked at it, the first thing I thought was toss was bad. So I turned on my Trade Monster. It was the same thing. Then I turned on CNBC. It was nothing. Then I was thinking, oh no, is it another 9/11 or something? You know, it's like, what happened?
Right. I did the same thing. You know, I came in, I looked for the news. I'm waiting for the news flash. What got bombed, right? And it was just nothing to substantiate it. It was kind of weird.
Yep. So this is what happened on that day. After that, I after that, I didn't do much to this position since since the 19th. So market stabilized and my P&L is regaining. I did move a bit here and there from moving this down and moving some of the shorts up. And then this is yesterday, so I'm almost break even. So this thing jumps a lot during live trading.
Right.
So this is where I am right now. And what is it today? How's it doing?
I think we're down
Oh,
8
so
or 9
now
points or something.
Yeah, this is my live position. So I'm almost break even now.
That's fantastic. That's fantastic. And these positions often they will recover. The thing is, you don't want to, So actually, I'll ask you now. How do you feel? How do you feel about when you're thinking of exiting this position now?
Right now?
Yeah. In other words, yeah. I mean, are you still going for profit target? Are you going for break even? You're just gonna kind of see where you sit in a couple days. What's your thoughts?
I probably won't exit now. Because I'm not in any danger, I may want to fix this upside risk a bit. Since I've got good theta now, I've already have a March position. So I've got two positions going on right now, but I'm not looking for profit really to hit any profit target anymore. I'm just managing until it doesn't make sense anymore. And now I still have 23 days. Usually I'll start peeling off around like tomorrow. I will keep it probably till next week, but I will be cutting down size. I think by end of next week I'll be all out.
Okay, yeah, that's good. And one of the things I do sometimes is if I draw down significantly, like if I'm in an M3 that draws down, 5 or 6%, a lot of times I'll take my initial profit target and drop it that 5 or 6%. In other words,
right.
I'm of the opinion that the position can only make so much money, and once it's drawn down, it can only make so much more after that. So,
right.
And
I actually am not even thinking of making a lot of money or much money at all. I would be just managing the position, looking at the Greeks to see whether it makes sense to stay in. If it does, then I will. If not, I'll just exit regardless of what the P&L is.
Right. So if you guys heard that, he's judging his exit based on the probability of the position. If I'm wording it right, Kevin, the probability of the position being a good position or making more money, not whether or not he hit his profit target. I think that's extremely important.
That's exactly what I'm saying.
Yeah, right. That makes a good trader because you'll see people hang in these positions that are just completely risk crazy to try and hit a profit target number, and I think that's just foolish.
Absolutely.
Yeah.
Absolutely.
Nice. Well, that was great, Kevin. Boy, a lot of lessons there. And for anybody who wants to be more successful, I think great job trading February too. By the way, that's great.
Yeah, it's been an exciting trade. Look at my commission; it's $3,000 over dollars.
I looked at that too, and I looked at my Thinkorswim account, and I saw the commissions, and I said, "There must be a mistake."
Holy cow.
I was like, there's no way there can be that many commissions like 2 weeks into the year, but I think that might be the case. So crazy market. But the thing is, if you can get through these times, because the market's not like this all the time, it's only like this sometimes. If you can get through these times without getting hurt too badly, that's a big win as far as I'm concerned. That's a really big win.
Yep, actually I'm glad that the way that I traded this month, and I learned a lot as well.
That's fantastic. That's fantastic. Well, let's see. We don't have any last minute questions. Do you have any closing comments, Kevin? Or
No, I think it's been an interesting discussion.
Yeah, I think it was awesome, and we got some good comments here, saying awesome information and thanking you. And yeah, I'd like to thank you as well, because I think, it's one thing hearing it from me. I sell programs, I sell mentoring and all that other stuff, but it's completely something different to somebody who's come in. I mean, you're doing free coaching, which is awesome, which I do recommend for other people as well. You learn so much faster when you start teaching it. You figure out what you don't know. And
Exactly.
some guy who come in here, he had an IT job, he learned how to trade, and now he's doing great as a full-time trader. So I commend you. You've been doing an excellent job.
I'd like to thank you, John. You helped me significantly.
Well, thank you very much, and I like to hear that too, because that's why we do this, is so that we can help people achieve their dreams. So,
Right.
all right. Thank you, Kevin, and I guess with that we'll close up.
All right. Thanks, John.
Okay, and thanks for joining us, everybody.